Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1272A, and today's date is May 5th, 2017, and the title of the episode is The Fed Confirms Next Economic Crisis, Massive Stimulus Planned. Let's get into the economic collapse financial news. Now, it does not look good up in Canada for home capital, and we talked about home capital where they had to get this bailout. And it looks like they received up to $2 billion. But guess what? Out of that $2 billion, they've already spent $1 billion. Half of the emergency lifeline. They only have $1 billion left. And most likely they're going to spend that in the next week or two. So when we look at what's happening up there, it looks like things are not going to be going very, very well for home capital. And it looks like they're going to need something else to help them get through this because they're going through all of this cash very, very quickly. And we need to understand that this is just the tip of the iceberg. There's no way that this is just isolated to one company. Just like we all thought, oh, Bear Stearns is just isolated to Bear Stearns. No other company is going to, be involved in what is happening here. And then all of a sudden we hear Lehman, AIG, the automobile manufacturers, every bank on the block. And we can see that this is just the beginning of the total destruction of the economic system, because the economy right now has been built on this illusion, and the illusion has been kept alive since 1913, if you really want to think about it in those terms. But lately, since 2008, when the system should have just completely died, they pumped up the entire system, kept us in this dream state all this time to make everyone believe that the economy is fantastic. And you have to remember, the insiders understand and they know when the bubble has hit the top because they control everything. They understand when they're going to bring it down. And this is why we see corporations, hedge funds, investment companies, they're all getting out of the stock market. They're getting out of real estate. They're getting rid of their assets right now because they understand those assets are going to fall in price. And they're going to be taking their profits right now. And they want to sell this off to the retail investor, the speculator. And this is what's happening right now. Now, to keep this illusion alive, they need to continually come out with fantastic data from the government. And nothing's really changed since Trump has gotten into office here. We can see that the payroll numbers, they've come out, and they're telling us that everything was revised and everything just rebounded in April. Now, this looks good for the Fed, where they said, hey, this was just transitory this last quarter where we had 0.7% GDP, and the next quarter, everything's going to be fantastic. Now, like I said, they have the ability to manipulate everything to make it look fantastic. All they have to do is revise. All they have to do is leave people out of the job market. All they have to do is export soybeans. They can do whatever they have to do to keep the economy looking like it is fantastic. And their June meeting is coming up, and we know this is the in-between period of when the GDP numbers are being released. And most likely, because they have to stay on track, they will raise the interest rates. Now, the unemployment rate, it has come down to, 4.4% right now? This is the lowest level since May of 2007. Now, we're hitting that point in time where the unemployment rate was almost exactly where it was before the economy completely crashed. Now, this unemployment rate is completely manipulated. Most of the people have fallen off the job market. Those people who haven't been on an interview for 4 weeks, well, guess what? They're just not counted. And think about it. We just had the announcement that there are 3,500 stores that are going to close in the first quarter of 2017. And they calculated it out to about 8,600 plus stores for this year. And corporations, they're not making profits. They're laying off people. So, are these numbers real? No, they're not. It's all on how you play with the numbers to make it look like we are at full employment. And we know that we are not. If you look at shadow stats and you look at the calculation they used prior to 2008, I think it's going back to 1990, the unemployment rate is close to 22-23%. And if you calculate all those part-time jobs into this, I mean, the unemployment rate is most likely around 30% right now. Because you have to remember, those part-time jobs, they're counted as a full-time job, but when they lose them, they're not counted as a loss of a full-time job because they have to meet certain requirements, the hours and the pay, and this varies by state. But we can see right now that is completely manipulated. Now, the central bankers, their whole objective is to continually increase the debt, blow the bubble up as big as you possibly can. And we can see already that many individuals, well, they're using their credit cards just to make ends meet because they don't have the cash to get the food, to pay for goods. And we see right now that student loans and auto loans, they have hit an all-time high of $2.6 trillion. I mean, this is just unbelievable. And we see right now that there was an increase of student loans of $32 billion for the quarter and $80 billion for the year, which brought student loan total amount up to $1.44 trillion. Now, on the auto loan side, what are we seeing? Well, we saw an increase of $8 billion for the quarter, and we see $73 billion for the year. This means right now that auto loans has gone up to about $1.12 trillion. Combine those two together, we're looking at $2.56 trillion. That is a lot of debt. And again, the only way the central bank works and works well is if it continually spreads debt to other countries, to individuals, and they need to continually do this. Now, it looks like the New York Fed and the Atlanta Fed, well, they're looking at new second quarter GDP numbers, and they're estimating right now. And this time they flip-flop, where the Atlanta Fed had a very low GDP number and the New York Fed had a very high GDP number, and they included the soft data when they were calculating that out. The Atlanta Fed right now has once again started off very strong. They're expecting 4.3% GDP. Now, they started off that way, but they lowered it to 4.2%, and we know that this number is never going to be reached. I mean, they're going to have to do a huge manipulated calculation to get it to where they want it. Now, the New York Fed, on the other hand, well, they started at 2.3%, and now they're down to 1.8%. Now, think about this. The first quarter is at 0.7%. Do you really think that we're going to be above 3%? Actually, do you really think we're going to be above 2%? The only way we can get above 2% is if they manipulate it like they did right before the elections, where all of a sudden they exported soybeans, which was a one-off thing, and they brought it up to like 2.8, 2.9%. That's the only way they're going to get to that area. But the Fed doesn't care about that right now because they meet in June. And they will look at the numbers that we just have seen right now and other numbers that are going to be coming out. And they'll say, oh, well, the Atlanta Fed and the New York Fed, they're telling us that GDP is pretty good. The unemployment numbers look good. And guess what? We're going to raise the rates because everyone is going to forget about what happened in the first quarter. And the Fed said it was transitory anyhow. The reason why they need to do this is because they are on track to bring this economy down. This is their whole plan. And by raising the rates a little bit at a time, they're waiting for the trigger where the economy starts to really fall apart. And once it starts falling apart, it's like a snowball coming down a hill. It gains speeds, gets on more snow. And as it comes down the hill, you won't be able to stop it. And this is what they want to happen. And once that starts to happen, they're going to start reversing the interest rates, just like they did prior to 2008. Now, we are getting indications that the credit event in China, well, things are rapidly collapsing. We're seeing red flags right now. And if we listen to Bill Holter when I had him on many different times when we talked about the credit market, he said the credit market is eventually going to freeze up. And we know from UBS we had the credit warning where it dropped below zero, which tells us that something is wrong here. And we're starting to see signs that the credit problem in China, well, we are seeing different signs that we're headed down this path where things are going to rapidly deteriorate, and it does not look good whatsoever. What we're seeing is the interbank rates in China, well, they're spiking, meaning banks increasingly don't trust each other, and this is how any banking crisis begins. China's Mishing Bank recently issued a ghost fraudulent WMP. They raised $436 million in funds for the CDO, like assets that had no assets backing it. China's top insurance regulator, chairman of the China Insurance Regulatory Commission, is currently under investigation for severe disciplinary violations. We're also seeing, which was revealed overnight in China, that bank WMP issuance crashed 15% in April. And this is a strong indicator that the faith in these products, well, they're starting to wane. And what we're seeing right now are more and more of these warnings that are coming out that something is happening in China. And China is the country that propped up credit from 2008 to this point. And we're starting to see that once this falls apart, it's going to be a complete disaster. Now, what's very interesting about all of this, and Janet Yellen said this a couple of months ago, is that when the Fed is introduced to a new economic crisis, they will start the stimulus up once again. And we're getting from Eric Rosengren from the Boston Fed and St. Louis Fed President James Bullard that they're saying, I think it's inevitable that we're going to be talking about the balance sheet expanding during recessions, saying that if we have an economic downturn once again, the Fed would again have to resort to quantitative easing or QE when the crisis hits. Now, they continually are broadcasting that this is what they're going to do. Now, if I'm not mistaken, they've been telling us that the economy is strong. They're raising rates right now because the economy is doing well. Why in the last couple of months are they talking about another economic crisis? Why are they talking about lowering the interest rates if the economic crisis hits? Why are they talking about creating stimulus for the next economic crisis? Because on one hand, the corporate media and what they're telling the country is that everything's fine. We're raising the rates. The economy's doing well. And in backroom meetings, they're talking about the next economic crisis. They're talking about stimulus again. So what they're doing right now is they're confirming that we have a major problem. They already know that there's going to be an economic crisis. They already know they can't unravel their entire balance sheet. They already know that they're going to have to create currency. That's why they're raising the interest rates right now. They want to trigger the crisis. This way, when they trigger it, they can blame it on anybody, because they're saying they're raising the interest rates. Everything is fine. It was because of Trump's policies. It was because of this country. It was because of them over there. This is the way the central banks work. And we can see right now, as June approaches, we're going to have to look at this very, very carefully, because if they raise the rates in June, it means we are perfectly on track for this system to come down maybe by the end of this year or the beginning of 2018, depending on how many more times they raise the rates. Because I don't think it's going to take that many times for something to get triggered and the whole thing start to fall apart. Because the economy has been built up on an illusion. And from everything that we've been looking at, from going back in time, from all the economic data, we can see that this economy is not what they are saying it is. Just like back in 2008 when they told us the subprime securities, they were fine, AAA, the economy's strong. Then we come to find out after the crash that it was all a lie. Well, we're going to have the same type of thing happen. Once the crash happens, the truth then will come out. But of course, it's too late. You can't start preparing. You can't start getting food. You can't start getting water. You can't start getting gold. You can't take your cash out of the bank. You can't do any of these things because once the system breaks down, it's too late. You're going to be scrambling like everybody else. Go back in time to 2008. After everything started to fall apart, were you able to do anything at that point, especially those individuals that lost their pension, lost their money in the stock market, lost the homes they owned? What were you able to do? Nothing. And this time around, it's going to affect almost everyone. So get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.